My name is Beth Porter, and I'm Policy Advisor on Financial Inclusion at UNCDF. And we're very pleased to invite colleagues within the UN system, some colleagues from the missions here in New York to the UN to join us, and as well as those within the UN system and Friends of Financial Inclusion around the world to join Leora on her tour. And I think she needs concert T-shirts with all the locations, and it might have to be a long, like a dress, because instead of a T-shirt, because she is embarking on quite a busy schedule over the next few months. So we're glad, and even though it was very short notice, for which we apologize, but if we didn't snatch her today, we would not have another chance until sometime in September. So we're very pleased to have Leora Clapper here, who's lead economist at the World Bank and the Finance and Private Sector Research team. And she, as many of you know, has been the leader, the architect of the global Findex, which is a global survey that's been conducted every 3 years since 2011. And so now it's very exciting to have 3 data points so we can start seeing even more, get more insights in terms of trends in financial inclusion. And she'll share those results with us today. So with that, well, let me just describe what we're going to do today. So Leora will present to us some of the key findings that have come out of the Findex. And so our plan was to go through that presentation and then ask you to hold your questions until afterwards. We'll have an opportunity here in this room to ask questions and have a discussion. And if those of you on the webinar would like to raise any questions, please do type in your messages just to avoid the back and forth on, are you muted? I'm not muted, bad, you know, can you, we'll just have those typed in at the end and ask those questions at the end of the presentation. So without further ado, hand it over to Leora.
Thank you. And I think I'll sit so you can see the slides, which are more exciting. And also, if you have any clarifying questions or definition, please jump in and interrupt. So 2009, the World Bank and the leadership of Maxima started collecting global data on a number of accounts, supply-side data collected directly from regulators, and our first real glimpse at what we now call financial inclusion around the world. Before that, I come from a corporate finance background. When someone asks about financial development, you think about corporate debt, you think about corporate borrowing. And so the first time we started wondering about the use of individual financial services and collecting data, at least, of those, and measuring use of financial services. But it was frustrating because it was a black box. But yeah, we knew how many accounts there were. I wanted to know how many women had an account. Looking at the unbanked, how many unbanked were women? Of the women who were unbanked, why were they unbanked? How many had identification? Today, we care about how many of them have a phone. We also were interested in where are their opportunities? What do the financial lives, especially of unbanked, especially of the poor and women, look like? So with funding from the Bill and Melinda Gates Foundation in partnership with Gallup, we went out and asked them. So it started, we asked about 150,000 adults around the world, each round, about their financial behavior. Here's our headline map. Got a lot darker since we first started in 2011. We added about 1.2 billion new accounts, about 515 since 2014. Between 14 and 17, our headline number, account ownership rose from 62 to 69%. There's a big caveat here. That 300 million of those accounts, of the 500 we added since 2014, are in India. India alone grew from 52% to 80% financial inclusion. They won the Guinness Book of World Records for opening the largest number of accounts in a month. They opened about 200 million accounts in 1 month. This was fueled from technology, having biometric-enabled identification numbers, the Aadhaar number, allowed the Indian government to commit successfully to a program to simply roll through the country, opening what they refer to as a JDY, simple, no-fee account, which we'll talk to a little more about later. As you can see, well, let's jump in even further. I would argue digital technology is leading this growth in financial inclusion. I mentioned we have biometric identification in India. We have mobile banking. Here's in sub-Saharan Africa. Mobile money accounts doubled since 2014. We now have over 20% of adults. Among women, it increased from 10% in 2014 to 18% of women in sub-Saharan Africa having a mobile account in 2017. The real darkening of this map. What's really interesting is that we started in 2014 asking questions for the first time on mobile money. It was a Kenya and M-Pesa story. Maybe a little bit around East Africa. Now it's been massive growth in mobile money accounts in West Africa and beyond, Paraguay, Bangladesh, and some other markets. We also see, and I mentioned the pause for a second, I think what's really important is our ability to look at who are the unbanked, right? And so this goes certainly beyond supply side data, anything we can collect from regulators. To ask the question, who are the unbanked? Where are our challenges? And so on the left, we just see the geographic distribution. Even though India is now on par with China at 80% inclusion, being a numbers game, we still see the largest number of unbanked in these countries. However, we also see, Bangladesh, Indonesia, Mexico, Nigeria, Pakistan, other countries with large shares of unbanked, global shares. We also have seen that over half are women. Some countries I highlighted over 60%, 65% of the unbanked in Bangladesh are women. They're poor adults, they're less educated. Really importantly, my last bullet, they're out of the labor force. Now we're talking about really hard demographic to bank, okay? So these are people potentially with less financial capability, less able to manage their money, less likely to have money, and in addition, without any regular source of income. So here's our challenge: is designing the appropriate products. Just challenged at the presentation on, well, you're talking about helping the poor manage money. They don't have any money. Isn't that why they're poor? And my response is, of course the poor have money. It's just that it's unstable, it's unpredictable, it's harder to manage than our money, and they're not going to a 9-to-5 job. They're often farmers who receive money, for example, twice a year. However, they have to buy food daily. They have to pay school fees monthly. They have to buy their seeds and fertilizer for the next harvest. And so our challenge is designing financial products for these harder to design market segments. We also ask an unbanked, why don't you have an account? The most common reason is I don't have enough money. However, it's important to note on average, people give 2.2 reasons. I don't have enough money, and the account is too expensive. Which certainly leads me to believe that if we designed more affordable and convenient products, people would then have potentially a need for it. Only 3% of adults globally say, I simply don't need it or want it. We also find that a quarter of adults still reporting banks are too far away. Very nicely, since 2014, we see a drop in that reason in countries such as West Africa, where mobile money has expanded. Most rural villages don't have a bank branch, but increasingly every village has a mobile agent who can sell minutes and increasingly provide also financial services. As I mentioned, over 60% of adults saying banks are too far away have a mobile phone. Here's our opportunities. We also have about a quarter of adults, for example, in sub-Saharan Africa, reporting documentation as a barrier, including 40% of adults in Togo. What I'm showing below is the gender gap in documentation. In 17 sub-Saharan African countries, less than half of all women have an ID. And so although Senegal, Cote d'Ivoire, there's no gender gap, we see almost 80% of adults having a documentation. If you look at Togo, there's a 17 percentage point gap between men and women. This is new data that we collected with the ID for D team at the World Bank, and it's all available on our website. We also see, although we've seen progress fueled by technology, we're seeing that the gender gap is still stuck at 9 percentage points. And developing economies, and hasn't changed since 2011. Also show on the left, this masks much bigger differences in many markets. Let's talk about the good news first. Indonesia, we have over half of adults now have an account. There's no gender gap. There never has been one. India has reduced their gender gap from 20 percentage points to 6. The JDY accounts have been successful in giving accounts to all. I'll give a caveat to that in a couple of slides. If you look at the left, Nigeria, Pakistan, Bangladesh, 30 percentage points gender gaps. I gave a few examples. And what's frightening is that we're seeing a number of countries where there's been a surge in account ownership. All of these new accounts are going to men. Pakistan, over 90% of new accounts are to men. Bangladesh, where the growth in account ownership has been fueled by Bcash, by mobile money accounts. The reason I'll get into it in a couple of slides, women are less likely to have mobile money accounts, and almost all the growth in new accounts is going to men. We now find that 65% of men have an account, I guess only 36% of women. This puts up very briefly to mention, it's also, we have a number of countries that are aiming to be that 50% mark, to be able to say that over half of adults in their country have an account. And they've been successful for men. This whole list of countries on the left, we see where over half of all men have an account. Because of 20 percentage point or larger gender gaps, they'll never reach their goals unless account ownership is inclusive. Peru as well, in addition to many Middle Eastern countries, South Asia, Central Asia, etc. We also just show in passing, and all this data is available on the web, also disaggregated that poor adults are less likely to have an account, and also older adults in most countries are less likely. We're seeing some progress, specific progress in account ownership among youth who are using more comfortable with technology, more comfortable using mobile money accounts. It's the highlight, thanks to Beth and all of your efforts. We are SDG 8.10, which we're very excited about. And here is a figure from a fantastic visual publication by the World Bank, the SDG Atlas, which was just released last week. There's some interesting suggestion that technology is helping us narrow the gender gap. So, for example, in Cote d'Ivoire, men are more than twice as likely as women to have a mobile money account. To have a bank account, so there's no gender gap among mobile money accounts. This might be because it's harder for women because of social norms, of family responsibilities to travel to a branch in the city, but they can use mobile banking services in their village. It might also be that women are more comfortable working with a merchant in their village than with a male branch teller. We also are seeing that mobile money accounts having a significantly larger difference among the poor. For example, what you're looking at here is the blues are bank accounts, the purple is mobile money account. Just looking at the bottom, Zimbabwe, you can see how the blues, bank accounts, the rich are far more likely than the poor to have a bank account, but the purple bar, mobile money account, is much more prevalent among the poor and very much helping to narrow that income gap. Okay, I will make also, it's hopefully no longer provocative statement, that I believe that digital inclusion is key to financial inclusion. That on our financial inclusion agenda needs to be access to the technology, specifically for women, so they're not left behind at the starting gate. As all of our efforts are really moving correctly towards technology-enabled financial services, we're seeing examples, as I mentioned earlier, Pakistan, Bangladesh. Pakistan, men are more than 4 times as likely as a woman to have a mobile phone, being left behind at the starting gate. We have very exciting new data. This is collected from Gallup which will hopefully be released with our individual level data in September, on do you personally own a mobile phone? It's kind of interesting to note that when we started collecting this data in 2011, the question was, does your household have a phone? Because the phone hung on the kitchen wall. Today, the phone is in the man's back pocket, and women do not necessarily have access to a household phone the same way they used to. So we asked, do you personally have a mobile phone, and do you personally have access to the internet? And so here's a map of phone ownership. There still are gaps in Africa. So again, important to note, globally, there's a 10 percentage point gap in phone ownership, and that masks, I'm sorry, this was the older version. Okay. I deleted the slide earlier. Here just highlighting on the right, just a couple, for example, in India, 78% of men versus only 59% of women have a mobile phone. We also have data on the internet, and here too we have a series of countries where men are more than twice as likely as women to have access to the internet. Again, this is something we need to keep our eyes on to make sure that women have equal access to mobile money accounts and other technology-enabled financial services. Let's talk about activity for a second, and dormancy. This is something interesting to note. Let me also, definitionally, mobile money accounts in our database are active. We asked the question, did you in the past year make a payment using Bcash, using Gcash, using M-Pesa? So by definition, they're active accounts. So this is really around bank accounts, a financial institution. We asked the question, this is just showing the very basic definition of did you make at least one deposit or withdrawal in the past year? So you haven't made even one deposit or one withdrawal in the past year. We double check that later to make sure you weren't receiving a wage or any other payment directly into the account. The account has not been used for a year. I won't use the word inactive. Well, here we have it. The correct word, I'm sorry, I won't use the word dormant because I don't know if you've parked savings in that account. You may have savings there. It may be being used, but it's inactive, and that's the term we use. India, so we had this surge from 52 to 80% of account ownership. We have 55% of accounts being reported as inactive. And a 10 percentage point, 50% of accounts being inactive, 55% of accounts for women being inactive. And so I, being the optimist, would spin this as the world's greatest financial inclusion opportunity. How do we design appropriate, convenient products for especially women to be using these accounts? It's interestingly, since the beginning, there's been something of a South Asia story, these dormant accounts, which on the right you can see, India, Bangladesh, Sri Lanka, very high rates of literacy as well. I can answer questions about specific countries later.
Can we ask a question at this point, or can we ask them later?
If you want to hold your questions,
yeah,
we'll clarify questions.
Clarify questions now, and then we'll open it up to more substantive questions.
Sorry. Okay, so.
Just a clarifying question.
Yes, please.
In 2017 and 2014, the question is different, I think.
Okay, it's the same.
I don't know where that came from.
Okay.
In fact, maybe where it came from. So actually, under the Chinese G20 presidency, China really took the lead in asking us to develop, really challenging me to develop new indicators of dormancy and activity. And so we wrote about, I thought it was a very nice note, and actually the indicators which we now use in our report from that exercise, looking at digital dormancy. So we talk about our baseline definition is exactly the same. It's been since 2011. We also, I'll get into this in a moment, look at, let me jump right into it. Where are opportunities to increase access and usage of accounts? I'm going to answer you in like 4 slides. Okay, what do people use their accounts for? Savings. Just quickly go through these. Savings has been flat since 2011. We haven't seen big growth in people use. This is not on the margin. I don't know how much people are saving. Just simply, do you save at a formal account? Do you save otherwise? What is important to note, though, is that especially in sub-Saharan Africa, about a quarter of both men and women report saving using a community savings group, a susu, someone that comes to your home. These are often expensive, less safe ways of saving, but they're people who are able and willing to save, but doing so in less safe ways. And so again, I see this as a market opportunity. Not only that, there are 160 million banked adults in developing economies who are still saving in these semi-formal ways. When I went to Ghana, actually, this was a big mystery in the data to me. Why would people with an account save under the mattress or save even using a susu? We asked them, and these women in Ghana told us, it doesn't make sense. I need to save $1 a day outside the home, or that money will be stolen by a family member. It just doesn't make sense to every day take a bus across town, wait online to deposit $1. Banks aren't designed for that. And therefore, I use a susu, comes to my home, and returns with less a day savings at the end of the month. And so again, this is where using merchant, agent, banking, mobile money accounts allows us high frequency, low denomination payments, including to oneself, which is what savings really is. And just here are some of the opportunities. Again, these is all in our report where we can talk about, we can actually measure numerically, that there are 35 million unbanked women in sub-Saharan Africa saving these community savings schemes. Borrowing patterns. Borrowing is more complicated. I can't tell from our data whether people are deserving of credit or applied for credit. All we know I can talk about is how people are borrowing. Certainly in developing countries, the most common form is from family and friends. We also have questions on, I'm sorry, this is here. Let me just briefly, this is, do you save or borrow, start or grow a business? This is the G20 countries and even the gender gap. So even in G20 countries, we're seeing a big gender gap in men versus women who are save or borrowing to start or grow a business. Okay, so this is getting back to Seven's question. On the right, this is digital activity. So beyond just whether you've used it for a deposit or withdrawal, have you used your account to make or receive an electronic digital payment? We've seen a big growth since 2014. It increased by 12 percentage points. We now find 44% of accounts in developing economies, adults in developing economies making or receiving digital payments, about 3/4 of account holders globally. And there's some economies, China, for example, where it's increased by 23 percentage points. In China, 85% of account owners tend to receive a payment digitally, including over half that report using their phone. This is important to highlight, because I would be a little agnostic about this. The use of the phone, to leveraging the mobile phone to deliver financial services, both through mobile money accounts, but also through other ways. China is the alternative model where over half of adults are using their account using their phone to make or receive a payment from their bank account. We have data on debit cards. About 1 in 5 adults report swiping a debit card. Going back to the India example, so in a separate study, we have a report up on our World Bank working paper. We looked at just the challenges of opening a bank account in India. 13,000 adults across 13 states. The cost, time, documentation requirements. The JDY account is supposed to include a free debit card. Over half of account holders told us they didn't have the card because it was too expensive. Certainly, if you have to stand online and use a teller to make a deposit withdrawal, you're less likely to use your account. And so again, one of these challenges in India is making it easier for people either through card-based ATM, make sure you have debit cards, or developing mobile ways of accessing your account through mobile phones. We also ask about online shopping. I think this is just a really cool market opportunity. In 2014, I very naively asked people, did you purchase something using the internet? And was highlighting this as internet purchase, as online shopping. In fact, it wasn't. We find 80% of adults in Lebanon and Vietnam saying, well, yeah, I buy online, but I have to pay cash on delivery, either because they don't trust the seller, they don't trust the payment provider. Whereas in China, 85% of online shoppers pay online. You have Alipay, WeChat, which were developed to enable, with the intent of enabling online purchases. I guess on the right, the length of the bar are people who made purchases online. The blue bar is the share who actually paid online. Again, I apologize, I'm just giving you a taste of the data. Please go back to report, email us for additional information. So just in a few minutes, just to, again, throw up a few pictures showing the power of the data to measure market opportunities and where they are. First, not only can we tell you the number of unbanked around the world, I'm really interested in what's the number of unbanked who have a mobile phone. And you can take a picture, but this map is available in 9 languages on our website, share widely. So we have 1.1 billion unbanked adults who have a mobile phone. But again, keep in mind, we still have this 10 percentage point gender gap, which is much bigger in some countries. We find, this is just focusing on the gender gap, so in Pakistan and Indonesia, which has no gender gap. Let me also just note, this is a really nice question we have. Did you open your first, we asked, for example, do you receive a government transfer? How do you receive it into an account? If you say you received it into an account, we ask a follow-up question. Did you receive it? Do you receive it into an account that you opened for that purpose versus a pre-existing, etc.? And we find that globally, almost 10% of adults open their first account specifically to receive an electronic payment, including, that should be 13% of banked women in Egypt. About 20% of banked women in Thailand got their first account to receive a payment from a private employer or the government, which again shows a tremendous opportunity of perhaps these lower-hanging fruits, people who have an immediate need for an account for a safe place to receive their payment. And so here, we have about 80 million women open their first account to receive a government transfer payment. Government payments. So we have lots of evidence showing from the perspective of the government that saves the government time, money. It reduces leakage, to reduce corruption. We have, so Brazil, South Africa, about 80% of government transfer recipients receive that money into an account. In many other countries, it's much lower. Philippines, Ethiopia, Vietnam, over half receive it still in cash. Here's our map. The circle indicates the millions, the number of unbanked adults receiving a government transfer payment in cash. Philippines, Ethiopia, 3 million unbanked adults receive government payments in cash. About 230 million unbanked adults receive a private sector job in cash, 75% of whom have a mobile phone. I was on a panel last week when the new World Bank's SDG Atlas was released. where they lined up all the World Bank employees who have an SDG goal to sort of defend their goal. And I came after set clean water and toilets and more obvious developmental goals. And I started by saying, to reduce poverty, we care about better jobs. One of the three examples I gave, creating better jobs, creating women's economic opportunities, and reducing corruption, among others. And here, improving schools, creating better jobs, and reducing corruption. And we're touching on all of these things. Certainly better jobs. If you pay somebody into an account, I'm writing up some work in Bangladesh now, that we worked with factory workers who were previously paid in cash. We're now paying them into an account and showing that these women are saving more. They're reporting more control over their money at home. We certainly, from the government's perspective, making government transfer payments directly to an account can reduce corruption. And I'll end with a story of education. But here, so we look at private sector jobs, agricultural payments. As I mentioned earlier, farmers are perhaps most in need of formal financial services to help them manage their unpredictable, unstable incomes. About 1 in 5 adults who receive an agricultural payment do report receiving them into an account. I would highlight on the right, in terms of proof of concept, Uganda, Zambia, Kenya, Tanzania, where we find 20% of adults or farmers receiving their agricultural payments directly into an account. Large countries like Japan ask, what can the G20, G7 countries do to take a lead? These are countries that are often sitting at the top of global value chains, of tea chains, and of cashew chains. Nutella controls, I was amazed, 20% of the GDP of the Togo. Their hazelnut sales. These large global value chains, large government warehouses can take the lead in digitizing payments. And so there are about 280 million banked adults globally who are still receiving those payments in cash. Sending them into an account can help the farmers receive a wider array of financial services. Also potentially as well, even in these value chains, reduce leakage, make sure a cut isn't being taken out of the farmer's pay along the way. In India alone, 65 million banked adults are receiving agricultural payments in cash, 70% of whom have a mobile phone. Again, perhaps creating the opportunity for more affordable, convenient payments. A few slides left. So this is a new module writing up the summer. Very exciting. It will be coming soon, where we developed a new module with funding from the AXA Foundation on agricultural risk. We ask if your primary income is from growing crops or raising livestock. We ask, did you suffer losses? Did you receive compensation? And so we can really measure the adults who are vulnerable to losses and where there's the most need for various risk management insurance products. It's showing on the right some subsample of sub-Saharan African countries. The length of the bar are those who say their primary income is in agriculture, livestock. The dark and medium orange are those who suffered losses, and only the dark orange are those who receive some sort of compensation for their loss. And so here, going back to the Findex data, when we look, we can again highlight where these big opportunities of unbanked adults receiving cash agricultural payments. I guess finally, we also we ask, how do you make payments? Do you pay a electric, water, or gas, or electricity bill in the past year? And in India and China alone, there are over 500 million adults who have a bank account and are making these payments in cash. And so here, the challenge is for the providers to develop the right products, for the payment providers to allow it to be paid online. And it's not only convenience, because if we develop these products, that allows utility companies to invest in pay-as-you-go and other models once the digital payments is in place. So finally, to conclude, we look, at the end of the day, why does this matter? We would argue it's financial resilience. We asked people, could you come up with 1/20th of GDP in the next month? There's a health emergency. It's about $2,500 US. About half of the adults in developing countries say they could. They would primarily depend on family and friends. I think it's interesting to note the second bullet. Developing countries, women were 11 percentage points less likely than men to be able to say they could come up with the money. Poor adults were at 25, 27 percentage points less likely. And more so, we also asked questions on religious resilience. Do you save for old age? Again, it's very low. When 16% of adults in developing countries say they're planning for a time when they'll no longer be working. And finally, in developing economies, those who reported saving as their main source of income, less than half reported saving in a bank. So take the example of Pakistan. So that dark blue bar are those whose 20 percentage points of adults in Pakistan told us they would say that they're saving for their emergency. 18 percentage points of that 20 are only saving under the mattress. But the money can be stolen, the house can have a flood, the money may not be there when they need it. And so these are people who are saving for their emergency in unsafe ways. And so our challenge is to make sure that these people have a safe place to keep their savings so it's there when they need it. Takeaways, I just want to highlight the available, we have the overview note, which we circulated, the full report as well, but the overviews are published in French, Spanish, Chinese, and Arabic. If you'd like any copies for partners, just let us know. Our video is dubbed into French, Spanish, and Arabic. Please share widely. And the individual level data with covariates will be all 150,000 observations will be online sometime in September. So thank you. Look forward to your questions.
Great. Well, thank you.
And thank you again, all of you, for being just really great partners. We really depend on you along the way for questions and just helping us with the insight. So I'm glad to be helpful.
Oh, great. Well, we thank you very much, Leora, for that presentation. And at UNCDF, as well as the Better Than Cash Alliance that's housed at UNCDF, we really value the partnership and all the insights that you've helped provide on increasing financial inclusion globally, and particularly looking at the opportunities provided by digital financial inclusion, and the Alliance focusing on using payments as part of that driver and entry point. I will open it to questions. Both we'll start here, and then we'll also take some from those of you listening in. But first, I wanted to take prerogative as the moderator to ask a question that has come up previously, and in fact, there's a publication that came up asking about this question that you addressed on, or you raised on, active and inactive or dormant accounts. There was a question about how to choose, why the choice of a year for determining whether an account is active or inactive. And so I think we'd all be interested in hearing that, because particularly, and just, one note, as many of you who've been working in this financial inclusion space note, initially the focus was on access. Do people have access? Can they get to a bank to open it? But then what was realized is, and as the numbers have shown, that a number of, if you just open accounts and they don't meet people's needs, or there are issues of trust or confidence or many other issues, they may not use it. So you haven't met their needs. So really there's been a shift in attention to usage. So that's why this is important. So Leora.
Sure. Let me just touch on the last thing, because from Mexico, for example, it's important to note why people don't have accounts. In Latin America, so on average, 25% of adults say it's too expensive. In Latin America, half of all unbanked say it's too expensive, right? And so we really can, and we do have we have the toolkit. Expense seems to be an issue in Latin America. Distance is still an issue in sub-Saharan Africa. Trust is still an issue in some of the Eastern European countries that had banking crises. Memories are long and such. Regarding dormancy, great question. Simple answer. So we collect our data. Again, our goal is comparable, harmonized data, which is an incredible feat for 150. We have literally exactly 145 countries this year, and partnering with Gallup. So, for example, all translation is done by one team. The sampling for all 145 countries is done by one guy in Princeton, New Jersey. Data quality, the same team globally. And so we really have confidence in the harmonization. They go out over the calendar year, January to December. So many of our questions are asked of people, as I mentioned, with irregular income that we're scared we're going to hit them. We don't want the time of year that we hit them to affect the results. And so certainly with dormancy, we know people often will only use their account around harvest season, for example, to get their seed financing and their fertilizer financing, and they won't use their account for 4 months. And so I get scared that both over time, they may hit Vietnam in December one year and April the next year, we may lose a time trend depending on the time of year they're sampled, as well as across country, we want to make sure. So therefore, we err on a year. I also personally have, I think there are challenges in recall. In the academic literature, you tend to do 7 days or a year. Asking someone in 3 months, if someone asked me if I did something in 3 months, I would have to start figuring out what does 3 months mean, and that's even harder for people who are less educated. So we're comfortable. And again, this is a lower bound and a goal to improve. I also mentioned with dormancy. So Beth Reimschaft at CFI put out a nice report summarizing the data. And so in response to it, I think they posed as a question, in general, we don't have on the country level database sub-aggregations. So for example, we show all data, for example, by disaggregate by gender and income, but we don't disaggregate sub-indices. So for example, of people with a bank account, how many are active? That would be a sub-index. And so we didn't have it available disaggregated. However, this dormancy question I think is important enough that we're putting it on the web today or on Monday. We're putting up a new Excel file that will include dormancy rates disaggregated by gender, income, age, and education.
Wow, that's terrific. And that just to pick up on a point that you noted earlier, that this individual data there's lots of data already. It's not just the report, the World Bank shares all of the data, but the full individual data will be available in September, is that correct?
Within the individual level weights, so you construct however, slice and dice the data however you wish. So yes, the person on the phone, I'm very sorry we cut you off before. Do you still have a question?
If you do have a question on the phone, just because of sound quality, a number of people on, please type it in and we'll be able to see it here. So we invite all of you, any of you who have a question, to type it in. But while you're doing that, I'll turn to the room and see who would like to raise a question.
Okay. So I saw that you already uploaded a couple of data sets, and I was going over one of the data sets on use of accounts yesterday, and then you have those couple of those tabs, like figure 4.1, 4.2. So one of the tabs, 4.7, actually talks about this. It has 3 columns, and it actually talks about inactivity in a way. It talks about that you have not received or sent any digital payment. So what I wanted to understand is that inactivity? Is that how you're measuring dormancy? Because when I was looking at for countries like Kenya or for Uganda or for Zambia, Tanzania, the percentage was like 7%, 8%, 9%, and I was expecting more.
Okay, thank you. So I know the top of my head the title of the chart. Right, so I said we have 2 different. We talk about inactivity 2 different ways. One is simply no deposit or withdrawals in the past year. The second one is you haven't sent or received an electronic payment in the past year. But Kenya should be very low because, as I was mentioning, mobile money accounts by definition in our database are active.
Right.
Also, let me just throw out something really interesting about Kenya, which I didn't get to in my presentation. So in Kenya in 2014, I think it was over 70% of adults had a mobile money account, and very few people had bank accounts. 2017, over half of adults in Kenya have a bank account. And that's where we want to see with West Africa and other countries going. And I see that as a very exciting trend that hopefully we will pick up on. And it's happening for the same reason it will happen in Ghana and elsewhere, in that what's happening in Kenya is that the mobile wallet, people realize they had a safe place to store their money. It wasn't vulnerable to this threat, to theft, to impulsive spending, and they were using them for saving. And so banks hooked up with the MTNs to create, you could sweep your money into a savings account to build the credit history for appropriate credit, etc. And same things happened in Ghana. I was just on a call yesterday. The banks are very aggressively trying to partner with the MTNs the same way to have people sweep their money into proper bank accounts. And hopefully we'll see that trend growing.
So the column name was like neither to make mobile payments, nor to make or receive other digital payments, and this is for adults with an account.
So that must just be
Okay.
Well, inactivity as well.
Okay, good, thanks.
Right. So what he's pointing to is, which I worked really hard on, and I'm excited about. So every figure in the report, let's say I put up some of those figures. It shows the gender gap for 8 countries. We have on the web the data for all 145 countries for every figure and map in the report. So you can recreate them for your favorite sample country.
For a long time, the messaging that we've used about vulnerable populations has included rural and farmers the hard to reach. And it looks like that the rural populations have improved significantly this time out. And so, but I haven't gotten a sense of what that might be about. Do you have a sense of what, is it because of serious movement in India that brings the entire number up?
Right, so that's what I was a little crazy about. There are no regional averages in the report because South Asia makes no sense. Right? What is South Asia? You have Pakistan and Bangladesh, and then you have India, right? The data is so rich on the country level, let's keep it on the country level. Yes, so the globally driven by India and elsewhere, mobile money has had a tremendous impact. In the countries with very strong mobile money, agent banking more generally has successfully reached rural areas. Countries that don't allow mobile agent banking, such as Nigeria, have not seen growth, which is likely related. And it's not only mobile, just allowing agent networks seems to be effective in reaching those the last mile of adults harder or more expensive for them to reach the bank.
That's very exciting, and we have Constance and a few other people here from the Office of the United Nations Secretary General's Special Advocate on Inclusive Finance for Development, Her Majesty Queen Maxima of the Netherlands. And so this team, we've been working very closely on these issues of financial inclusion, and the Queen is a terrific advocate for this Findex data and worked very closely with Leora and others advancing, particularly with his focus on usage, which the Queen has really taken up and challenged us all to think about both measuring it well, but then also understanding what are the drivers to usage. So it's great to see the shift in rural and the attention to the gender gap. And lots of questions have been raised, of course, by some of both the increases and what we can learn from those and what were really the driving factors there. And unfortunately, this countries where there have been increasing that gender gap. And you were just mentioning the South Asia example where this is really quite stark. And you've talked quite a bit about India and a little bit more is known about that. But can you share from the evidence that you have anything that are explanatory factors on looking at the gains made by Indonesia, whereas neighbors in Pakistan or Bangladesh have not been able to achieve that the gap has shrunk? Is there information or insights that we can gain from the data, or do we need to take that data and learn more?
Right, so that certainly goes beyond the data. Actually, we're hopefully working this summer.
This is a little teaser. We're hoping to work on this.
The World Bank recently released Women's Business and the Law database. And beyond, I mean, there are only a handful of countries, although that literally legally prohibit women from having their own accounts. But there are a lot of related indicators, like can women travel by themselves? Can women work outside the home without their husband's permission? Also very importantly, we found, can women receive inheritance? Do women receive fair inheritance? Which all relate, and you know, if you want to call them social norms more generally, clearly have a large impact. This identification data for some sub-Saharan African countries, we see it. You know, women are reporting, I can't get a bank account because I don't have an ID, and we're seeing 20 percentage point gender gaps in identification. I also, and I'm also convinced that this the barriers to both accessing and using mobile phones is a problem. We should be tracking data on female mobile money agents. For example, GSMA collected the data this year for about 20 countries. It hasn't released it yet. Bangladesh mobile agents are typically tobacco shops and other establishments where women don't want to go. In Pakistan, we hear a woman won't give her phone number to a strange man, which is what you need to access your account. And so how do we work around we're not going to change social norms, but how can we work around them? Whether it be women agents or somehow allowing women to access their accounts without giving the male agent her phone number. And these are basic barriers that we need to address.
Right, that's great. And one of the things that we're discussing about doing together is using this global data that tells us so much, but then using some other sources, including country assessment toolkit that UNCDF developed to go a bit beyond that data and probe on some of the additional constraints that women and girls face in accessing financial services, using those services, controlling the benefits from those services by looking exactly at the legal and regulatory context, not only in the financial sector, but in other adjacent sectors which affect whether or not they can get those financial services, looking at some of the social norms issues, looking at issues of the providers that may be this unconscious bias, even in their design and delivery or their interaction with women and girls. So I think putting some of these together will give us some more insights into what's happening and how we can that gender gap.
One comment on quick comment on the dormancy, because there's been other things written about this. So absolutely, we want to track usage as opposed to just access to it. It's not enough to have an account; you have to use it. That should be absolutely a metric. But I would push back strongly against people who've been saying you should only be reporting active accounts with at least one deposit withdrawal, not inactive. That's because it really is the opportunity. You are halfway there. Like, for example, and again, I look at these are the optimistic trends. In 2014, Thailand and China were both at 80% account ownership and like 10-ish% usage, digital usage. Okay, both those countries are now in the 60s. On over 60% are using their account electronically. And it's amazing. If you look at the progression, India matches up exactly, lagged by 3 years, where China is. And we're seeing the activity. We're seeing the creation of the digital platforms in India, et cetera. And I'm optimistic that in 3 years, India will be where China is today. And so, I do think that our metric of financial inclusion as having an account in your name, regardless of whether you made a deposit withdrawal in the past year, is the right headline indicator. And then we need to watch, usage and inactivity.
I totally agree with that. I mean, and the only question why I had at the time was because usually this inactivity data, especially on the digital payments, is not usually published. I mean, I haven't seen it anywhere else apart from what comes out of Findex. At the same time, sometimes we see that it is measured by 30 days, 60 days, 90 days, wherein you have sort of a broader sort of timeline to look at it, which also makes sense to an extent. And the industry sort of averages for inactivity are somewhere around 20%, 30%, anywhere we see. But I feel that this would probably give a more measured sort of perspective when you look at a longer timeline of what the real inactivity rates are.
And this is an interesting point of inactivity. So Sri Lanka fell by about 4 or 5 percentage points. And I was totally not surprised. In 2014, I had to figure out, it was like 20, 30, some very large, 30% points of adults said they were inactive accounts. And what happens is, remember, this is perception data, and that's why it doesn't match supply side data. If you haven't used it, if you 10 years ago had an account to receive a wage payment or a government transfer payment, and you haven't used the account since you withdrew the money 10 years ago, you're not going to tell us you have a bank account. And we've piloted in over 30 countries, and we push people, did you ever have an account? Well, yeah, I used to have a job, but I haven't worked at that job for 7 years, right? And so in Sri Lanka, after, what you start seeing over time is if you don't create opportunities for accounts that were only used transactionally, that aren't used anymore, people just stop reporting them. And so although the supply side data in Sri Lanka might be flat, I'm not surprised that that some of the activity rate is being substituted out by an actual drop in reported account ownership.
No, thank you. So first, thank you, Leora. It's a terrific presentation and really fascinating. What struck me is the journey from dormancy to usage. I mean, we have experienced the same in the Pacific, where I think the challenge we posed 2 years ago was very, very low usage, and I think focusing very much on the use case, on the value to customer, on the client-centric design. we kind of move the needle to a much higher usage. So I think it's a journey. But what I take from the overall message about this presentation is the infrastructure is there, the opportunities are there, and we just need to leverage on them. So it's really give a very interesting message on how to ride the opportunities of, payments which are being made in cash to people who have a mobile phone. And I think the payment story from the government, the private sector side, beyond the person to person that we usually talk about, is a very fascinating one. So I think as a general reflection, it would be really powerful to use that data to really think about the kind of user case, product design, and leveraging existing opportunities. So it's almost like it's an important marginal investment, but it's still a marginal investment. You build on infrastructure which is already there, and you just have to bring value to customers around it and kind of drive usage. So fascinating. I very much appreciate the partnership we have, and also leveraging the kind of data with, as Beth was mentioning, the insight we're getting from some of the kind of diagnostic we have done around an economic environment, the other source of data we have on demand supply side. So I think it's a terrific platform for us to really think about what we do and how we are heading, in terms of seizing opportunities. So.
Yeah, I very much enjoyed. I worked with UNCDF and BPCA colleagues. We put together these two-sided infographics for each of the SDG goals.
That's right.
Because at the end of the day, what we need to prove is, again, like literally my colleagues push back, a bank account is a luxury good. Why does everyone need a Mercedes? And we need to educate our colleagues that, managing your money is the key, is critical to escape poverty, right? And we do that by showing these linkages. And so, we reviewing both the literature, but also all your operational successes of, pay-as-you-go models, et cetera. And we're hoping they're going to be published sometime this summer. Again, that was a really nice collaboration.
Yeah, and just to pick up on that work was done as well in conjunction with Her Majesty Queen Maxima and her office. And again, that was, we started out, when we talk about financial inclusion, it's to what end? It's a means to an end. It's not an end in itself. It's very nice to have an account, but what it changes, the fact of having an account doesn't change your life. The fact that you can save for family goals or for children's education, or that you can get access to insurance for dealing with crop loss or unexpected medical costs. Those are the kinds of things that change people's lives. And so this attention to how does financial inclusion relate to reducing or eliminating poverty, to health goals, to creating new jobs and growth is really critical. And so, and it's important to get those messages out at a lot of levels, at a very technical level, so that colleagues at the World Bank and other colleagues within the development community can support governments' efforts to make those changes, so that governments themselves can understand some of these links and consider how they should fit this into their overall development plans and strategies and policies. And so these 2-pagers that we've started to put together are really aimed at some of those policymakers and decision makers, so they can see the relevance to their own goals in their country. So as Leora said, they'll be coming out soon, and we're adding the G20, the Global Partnership for Financial Inclusion, into the mix to release a fuller set of financial inclusion linked to the SDGs. So stay tuned for that.
A comment and then a thank you, and I'll do the thank you. And the thank you is an example how I've seen Findex data being used. But the comment is on the sort of the informal savings, right? And you noted the example in Ghana of people not wanting to travel across town to deposit $1 a day. But I think one of the other issues maybe to keep an eye on is, the savings groups themselves, they've sort of figured out how to keep that money a bit safer than, under the mattress or other informal means. And if you look at the average interest rate paid to net savers in those accounts, it's around 38%, right? So I wish I could get 38% on my savings. I can't. But most formal institutions, you're being paid 3, 8, depending on inflation of the country, is quite low. So that 25% might persist, right? And it's persisting, I think, because people are just rational economic actors, right? The thank you and the example is in a conversation with a minister of finance of a large African country about what their vision and strategy was for financial inclusion. Their response was that we know we're behind our peers because of Findex data. And we know from the data that it's primarily because of digital or financial services or mobile money. So it was interesting to me that a minister of finance was quoting to be Findex data, and the key role that sort of peer-to-peer comparisons play in driving motivation for financial inclusion.
Thank you.
Yeah.
How we can as a country.
I guess
It's anonymous.
doing business model of peer pressure. And I heard, he didn't know I was in the audience, a minister from Morocco was saying, had his little data book and said, basically we're exposing and shining a light on the gender gap. He's like, it's not acceptable that a 20 percentage point gender gap in our country, especially countries that have made efforts to give women greater economic participation. So, thank you. But go me end with my example. So yeah, I do remember. So right, so at this SDG meeting, saying that financial inclusion is key to improving schools, creating better jobs, and reducing corruption. That's the story before. We met a teacher in Zambia, rural Zambia, who the first day of the month closed the village schools for 2 days to travel to the capital to pick up her paycheck, her money from the paycheck, her cash, the payment. And she was complaining that she had to travel by bus with a lot of cash in her pocket that wasn't safe. And so, if they paid her into her phone in the village, this could reduce corruption from the government. We know it reduces leakage. Second, make this a better job for her that she didn't have to travel and pick up her wages. And 3, schools could be open to 2 more days a month. And so I think that really, gives the whole story of why digital payments is far more than a convenience and really can help us achieve development goals.
Oh, sorry.
Okay, go ahead.
Please,
Just one more question. So you mentioned how they need to travel to deposit their money to the city or somewhere far away. But is there also do you kind of get an understanding of the liquidity problem or just getting money out of agents as well? That could be a problem because they don't have money in their hands. So when they need the money, they might not be able to go buy stuff right away, right?
Absolutely. Right. So the ultimate goal is to create opportunities so when you receive the money to your phone, you can spend it. Which, Uruguay, there are countries that have achieved this. In Bangladesh, for example, some of the factories are now creating factory stores on site where you could purchase food, basic food, or rather than, as we did our pilot, when we did our interviews with the women, we asked them, first of the month, what are you spending on? So she said, 20% of your income goes to paying last month's grocery store bill. And I said, oh, you buy on credit, what's the interest? Oh, there's no interest. And finally, the third woman, I said, what would be the cost of the goods, the food, if you paid immediately? Oh, half the price. But there's no interest. But they're creating stores on site where they can make the payment electronically by swiping their card, so they're keeping the money electronically. We are seeing in Bangladesh, they're sending the money now home to the villages electronically without cashing it out. Increasingly there are pilots going around to try to help people pay school fees, utility bills, etc. So that's, the goal. Realistically, that's certainly not happening in many places, certainly not in rural areas. And that's where whether it be the government, the large employer, they need to play a role. Certainly, again, this is where I've worked in Bangladesh, the assurance that there is money on site always. Actually, the party we worked with, there was one pay day where there was something crazy in the road, the truck didn't get there with the cash, and there was no money on payday. And they actually now have insurance against that. And that's never happened since. But yeah, absolutely, liquidity is something that needs to be planned for in the case of, at least initially. So you need coordination.
And related to that, then there needs to be the trust. You need coordination, and the money needs to be there, and people need to understand that it is there and have the confidence that it is. Because I think one of the things you've talked a lot about today about some of the drivers for increasing financial inclusion and use of accounts. and we've seen in many countries using the government person's payments for a range of social benefits, that in many of these early cases where this was done digitally, people tended to withdraw the whole amount immediately, even when they didn't have a need for it, because the rules of the program might not have been clear, or they had a misunderstanding about it, and they were afraid if they left money in there, they would be determined ineligible to access that in the future, or the money wouldn't be there. So that's, I think, another really big part of driving up the usage is to have people not just withdraw right away, but have the confidence and the justified confidence to leave money in the account.
Yeah, absolutely. It was still never clear to us, but it seemed that there was one of the African countries that digitized payments, that there was a balance at the end of the month, and that you didn't need your next payment. Poorly designed, and also clearly that recipients understand keep their PIN number private, recourse, etc. And Mexico is an example where it hasn't been executed so well, right? So I would say it was designed to benefit the government, and it did. The government's costs have dramatically, DCCA and others have shown tremendous cost savings for the government, reduction in leakage, all the benefits to the government. However, the banks, and every penny is paid to a bank. But rather than build rural bank branches, the banks go out with cash and dole out cash payments to people in rural areas. IADB just reported that half of recipients, I've heard numbers, the government says it's smaller, but it's still a very large percentage of recipients are still getting cash. What's interesting with Mexico, not only the numbers flat or even down a little, is that we all picked up in both government surveys, other surveys between 11 and 14, this big surge in account ownership when the government digitized their payments, and it's been flat since. And that's because people who got accounts but receiving the cash payments don't even report they have accounts anymore. That's what you're saying, perception. And so, certainly we're trying to work with our my operational colleagues working with World Bank social protection groups are all now committed to digitizing government transfer payments, but making sure they're also developed with the recipients in mind.
And I think that's it starts to address one of perhaps the challenges or the perceived weaknesses or inadequacies of mobile money is that it's just used for payments, and it doesn't help if it doesn't connect to an account where people can build long-term savings or start to access other financial services. Then there's questions of if people are just sending money and that's all, is that financial inclusion? And it may meet some needs, but as we all know, and we all have a broad range of financial needs that we always are trying to match with the appropriate financial services. That's very true of the poor or the people who are or underbanked. And so I think when there's more attention to these design features in government persons payments, social welfare payments, or private sector companies paying wages, to these issues of paying wages not only digitally to make it less costly for them, but into accounts that people can then use is critical. So exciting space. Before we wrap up, are there any more questions or comments that people would?
I can take it up later as well,
Yeah.
but my questions don't seem to end. It's a very, very simple one. There is terrific data on domestic migration remittances, which certainly helps. Has there also been a reason why international remittances, the question on international remittances, whether people are receiving it or not, has not been captured so far? If yes, is there any plan for you to sort of think about it? And I say this because this data is so very much scattered in different silos, and that's probably the reason why the focus on data is also very well reflected as objective on the Global Compact on Migration as well. And we do have DESA colleagues here, and Bella, has been really leading the efforts. So just want to understand that if that's a possibility in the future.
Easy answer. It's absolutely critically important. In terms of volume, it's huge. In terms of number of people who receive international remittances, with exceptions, it's very small. And it's a number game. We need 10% of adults do something to aggregate the data with statistical significance. And there's actually a question in the core Gallup, It used to be like, do you receive money from help or from overseas?
Right.
And it doesn't hit 10% with the exception of about a half dozen countries. So we just don't have the power to study that. I wish we could.
Okay.
We piloted it, but it's not enough. We did a random sample of 1,000 adults. We weren't hitting 10% of the population.
Okay.
That's interesting.
I mean, official numbers are all around 4% of the population.
Yeah. Because it would have been really easy once we have the sort of broader data sets to be able to make the linkages of their engagement with the real economy, with different financial inclusion indicators as well, just beyond transactions.
Sure. And the 2020, thinking ahead, it's like just for like the Philippines and Bangladesh, there are a few countries.
Exactly.
We could always pay add a module in like 2 or 3 countries.
Yeah, I mean, especially those where the remittance dependence, like the GDP dependence on remittances is more than like 7% or something. There, and those would be less countries, but there the impact of remittances is way more.
Again, with 10% of it, where your numbers hit around 10% or more of adults.
Yeah, Nepal, Bangladesh, Philippines, Mexico would easily get.
And I think it's exciting. That could be really valuable. And the challenge, I think, for Leora and colleagues is always there's so many interesting questions to ask and to explore and
this is what we're thinking about.
Yeah, so that one may be on the list.
Yeah,
But
I think 6 countries,
Great, because you could go on and keep interviewees for half a day or longer with all the interesting questions.
Every time the ODA, lifeline for many economies, and the kind of discussion. I mean, if you talk about peer kind of incentive, among countries to do something, Myanmar, you always put that figure. I mean, 3.5 billion official remittances, 7 billion probably unofficial. Government is really concerned about the impact it has on its, on its macroeconomic balance, on its, and then the financial inclusion potential for recipient is huge. So I think for those countries, it can be a game changer. And I think for the development community to be able to have an informed kind of discussion and engagement to leverage those remittances to a broader value proposition. I think that is a real economy. That can be a very strong driver in policy dialogue, in innovation. But I hear you that it has to be probably targeted to a few countries because otherwise it's not significant.
Well,
Yeah,
thank you so much, Leora. It's been fascinating, very interesting, and thank you all for coming. Just to let you know, following this, in the invitation, there was a number of links to I believe the full report, the summary report, the little data book, the infographic video that Leora mentioned. But we'll also follow up, and I think it might be very useful to include the recently released SDG Annex that the World Bank has come out with. So we'll follow up and you connected with some of the resources that are out there. One other thing that we're looking at developing with UNDESA is actually a page on the Sustainable Development website that will feature the contributions of financial inclusion to the global development goals, and working closely with the Office of Queen Maxima and Leora and her team, UNCF and BTCA to pull together those resources. So that'll be an ongoing resource for those working in financial inclusion.
Those of you who write reports, this is the future of report writing. This SDG Atlas has no text. It's all annotated figures, which are just like really smart, and it looks fantastic. And they showed in last year's in 17, it was a page of text and a figure, just replaced by like a half-page figure that has all, 3D figure with all the information and text. And what they do, for any kids in the room, you could click every figure for the code, G or R code, to replicate the figures. So it's really a fantastic publication, and it looks fantastic. I would love to do that for my next publication. Look forward to Findex 2020 and all pictures. I recommend taking a look at it.
Great, thank you all very much. Thank you, Leora.
Thank you so much.